Welcome viewers and everyone tuning in live to our discussion on critical metals for one-to-one mining investment Americas. We're going to run this as an open discussion among our guest panelists. We'll have some time for audience questions to finish up towards the last 10 minutes of the discussion as well. So if you have a relevant question, please submit it by typing into the Q&A box that you'll be able to see on your screen. I'm very grateful to welcome today's panel, who are experts spanning across developing mining projects, analyzing supply and demand fundamentals of the critical metals, and deploying capital into various points in the value chain for the critical metals that go into our batteries and our electric vehicles. So we're in great company to get a rundown of where the industry is at the moment. So may I welcome firstly Chris Berry, CEO and founder of House Mountain Partners, Kimberly Berman, who's analyst of special projects and equity research at BMO, Chloe Holzinger, who's senior analyst in batteries and energy storage at IHS Markit, and Simon Gardner-Bond, who's CTO of Techmet. Emily Hersh, who is the managing director of DCDB Group and also a partner at Critical Resources Consulting, is going to be anchoring this discussion. So Emily, I'll hand it over to you to take us through and lead us on our way. So thanks very much to the panel for joining us.
Excellent. Thank you. Thank you, Adam. And thank you also for doing the introduction so that I don't have to botch any name pronunciations this morning. It's been a very interesting year so far when it comes to battery metals and battery materials, especially as the idea of a secure supply chain has started to gain more and more traction in different spheres. I wanted to kick off the conversation by starting with the recent announcement of the SPAC-led going public and financing of solid-state company Quantumscape to set the scene. And I want to start with Chloe on that. Chloe, can you talk to us about that deal and what it kind of looks like from someone who understands what's going on inside the battery?
Yeah, I think there are a couple key trends to pick out there. So first is really the decision to go public via SPAC in the first place. There have been a bunch of different clean tech companies, specifically in the batteries and electric vehicle space, that are choosing to go public via SPAC. And the rationale here is generally to raise more money and scale operations. And this is really kind of an interesting trend in the US. Basically, these companies have chosen to go public and raise these funds rather than venture funds because their timelines are very different from a lot of venture capital timelines and typical startup timelines. So I think it really speaks to Quantumscape's desire to scale operations very quickly and build a production facility. But then that really gets into, are they ready for that prospect? Have they completed a lot of the R&D steps and R&D milestones that would make a battery startup ready to build a pilot production facility? And I'm not really sure if we've seen that yet from what they disclosed publicly. Their electrolyte is an oxide ceramic, so it doesn't wind in the same way that today's electrolytes and batteries are made. So those systems would need to be stacked in a layered cell. And to my knowledge, they haven't really done much of that yet. So there's certainly a lot of milestones left.
Looking at the number, right? So it was sort of a $3.3 billion valuation. And going to Simon and Kimberly in the nickel space, which both of you watch, I haven't seen a number like 3.3 deployed to any new nickel projects. Simon, I believe Techmet announced I think it was $50 million investment for a nickel project in Brazil. Can you guys talk to me about how that scale of number feels to you from the mining finance side?
Yeah, do you want me to go first?
I mean, you go first, yes.
Yeah, thanks, Emily. Yeah, so Techmet, just to recap, if people may not know who are watching may not know who Techmet are, understandably, we're a private company, so maybe we're not that well known yet, but we are a private company that is investing in projects that are developing assets that are going to feed the supply chain for critical metals, for technology metals, for things like lithium-ion batteries. And as Emily said, recently we announced an investment into Techmet from a US, basically the US Foreign Investment Bank organization called the DFC, which is for $25 million, which we are going to feed down into a nickel cobalt mine development project in Brazil. And that's essentially turning it into a small mine. Now, the larger, talk about your size of scale, the larger project will be roughly $500 million, and that gets you roughly 25,000 tons of nickel a year. That's a very capital efficient nickel project. A lot of the production, and still some of the production that may come on stream, will be HPALs, where you can double or triple or quadruple that capex number to get a similar number of nickel tons. And to give you I mean, if I talk in very general terms, that would be enough nickel to maybe feed 1 gigafactory. So, I'll bow to Chloe's greater knowledge on the battery space, but if you look at the build out of batteries manufacturing that's slated for the next sort of 5 to 10 years, we're going to need a lot of capital input into things like nickel and cobalt and lithium to be able to feed the supply chain for those factories. But for 3.3 billion for part of the battery that's essentially not really proven yet, it blows me away. I mean, it's not. I would say, obviously, you have to have in mind the investors that are putting money into that SPAC, into that company, have a different investment horizon in mind, obviously, because I can't imagine you'd be expecting to see a return on that anytime in the near term, anytime soon at all. I think it's a very long-term bet.
I would agree. I think that, what everybody should be watching really for the battery space in the next 5 years is what's going to be built in Europe. So, the Tesla's factory, CATL's factory, that's going to be all in Germany, and all eyes should be on Germany. And nickel is the star here. So when you talk about solid state, you're looking at a horizon at least 5 to 10 years before we see it in a vehicle, because it takes time. This technology takes time. We have an entrenched technology, and and incremental improvements to that technology doesn't get the same media attention as these types of breakthroughs. And so solid state's been a buzzword for 5 to 10 years. It's going to continue to be one. And I agree with Simon that the investment horizon obviously is a little bit further away for this type of capital that's being put into this. And I also wanted to point out that there is a follow the money type of thing that goes on in the battery space, especially. Volkswagen's already put in a lot of money. These OEMs, they're basically looking for the next technology, and they have this money to allocate, and it's basically de-risking their projects. So, the risk is over here; it's already invested, rather than internally. So, it's a way for them to be ahead of the curve and to de-risk their research and development.
Chris, looking at what we've kind of heard from the other two panelists, how do you see the match between what investors have an appetite and a sentiment for, and then what's happening in the ability to finance a mining project for one of these battery metals?
Well, they've been disconnected, I think, historically. I think that a lot of the sentiment is news driven. I mean, when you talk about SPACs, one of the more interesting ones that I've seen this year is, of course, MP Materials trying to vertically integrate the Mountain Pass mine for the third time now. So there's a lot of interest because of, I guess, national security issues around these critical metals and minerals. But one of the interesting things that I have always found is that the majority of the investors that are looking at these at the critical metal space or the battery technology space are more often than not generalist in nature. So they're just as likely to invest in consumer retail or something else as they are in batteries. So it's more thematically driven. So, there is kind of a learning curve that I think needs to go in place there. I will say that, a few years ago, some of the questions that I was getting were, so what is the difference between spodumene and brine? Really basic stuff. And so that learning curve has really, you talk about hockey sticks. And so now, the incoming calls that I'm fielding are definitely focused on nickel and rare earths in particular. And again, trying to understand, okay, so how much are we going to need given, if Terra really is the new giga, as Elon Musk says, how much are we going to need? How much is it going to cost in terms of billions? Where is it going to come from? And, what are the challenges? One of the things that I think people really want to focus on when you're looking at just the metals from a more macro perspective is incentive pricing. Whether or not that's lithium or nickel, I mean, depending upon who you speak with out there, and maybe some of the panelists have views, but incentive pricing for new nickel projects, greenfield nickel projects, can run anywhere from $18,000 to $19,000 a ton. Okay, and here we are today. I don't know, I didn't look this morning. We're in this $14,000 to $15,000 range. So there's a window there, and that's kind of, I think, what investors are grappling with. Like, how much risk am I willing to take, given that we're pretty far away from incentive pricing for new nickel projects?
The next kind of round of questions, I want to talk about three interrelated concepts, which is product quality, cost of production, and ESG, so environmental and sustainability goals. Chloe, I want to start with you when it comes to the concept of quality, and more in line with the fact that most of these battery metals, unlike something like copper or gold, there is an extraction step, and then there's an advanced purification step of some kind to get these metals ready to go into the battery supply chain. From a quality standpoint or purity standpoint, or whatever the right metric is to use, what do you see happening on the technology inside of the battery, and how is that going to impact what types of chemicals are demanded across this material spectrum?
Yeah, that is a complicated question. I think, a lot of the trends in the battery space in terms of next generation materials are, these are trends that we've seen continuing, as Kimberly said, for the past 5 years. So increased demand for high nickel content batteries, that's going to continue and keep demanding hydroxide, lithium hydroxide for as a feedstock. But all of these different types of materials and high quality, demand for high quality materials is, there's a limited supply, as you said. And so we've also seen a swing towards LFP as Tesla adopts LFP in China. Volkswagen invests in LFP manufacturers. And so there's been a simultaneous swing towards battery materials that maybe require lower quality or easier to access materials to make automakers more robust against these kinds of swings in shortfalls and various different trends in the commodity markets.
Simon and Kimberly, I'm going to ask you guys the same question again, because I think that you're having a nickel project and recently financing it, and also the banking view of nickel are really complementary. So I'm going to exploit that for the benefit of my own education. And if the panel attendees learn something too, also great. But Simon, when you're working with the Development Finance Corporation, which is a US government-backed entity, I know that they are also collaborating with the State Department on the ERGI principles of good governance, et cetera. How do you see a nickel project in Brazil stacking up in terms of cost and the new or changing requirements for ESG impacting your decision to do this project versus another nickel project?
Well, I think, well, first of all, I think they're very important, and I think they're going to become even more important going forward in terms of your ESG credentials. So one of the things, we also have a lithium-ion battery recycling company, and we're developing that, and that's expanding. And so in the course of business with that, we're talking to OEMs about new battery manufacturing facilities that they're looking for. And I can tell you from those discussions, one of the things that surprised me from those discussions is how much weight they are putting in the future the metrics that each unit they produce, whether it's a cell or a battery or a vehicle, the units that they will have to put onto that in terms of CO2 emissions for its manufacturing, miles traveled, water used. So all of these sort of ESG metrics, which they do exist, but I think people don't really think or care, or consumers don't really care about them. In the UK, we have these stickers that you can get on, that you're legally obliged to put on every white goods appliance now. So if you buy a washing machine or a fridge, there's like an energy performance certificate, and to be honest, it's become a sort of background noise. People sort of say, well, I want that washing machine. I don't really care whether it's an A or an A plus or a B minus. But nevertheless, it's something the industry's had to adopt and accept and work through, and it's an extra cost. What they're saying to me, and the battery manufacturers and the OEMs and the auto manufacturers are saying that this is going to become the norm going forward. So that will feed through. So it behooves us to make that decision, make that important part of our investment decision now. So everything Techmet does and all of the projects we're looking at and that we'll be investing in developing will have the highest standards of ESG, because otherwise you just don't know what's going to happen to that project. It may even be stopped altogether. In terms of what the DFC is asking about and what the US government's focused on and what we're focused on in tandem with them investing in projects, they're not new. You said, Emily, that there's some new standards. To be honest, the standards are not new. There are very well documented and well laid out, very strict standards, such as the World Bank, IFC, Equator Principles. They are good for mining projects. They cover a lot of ground, and as long as you stick to those, then you're going to be developing a mining project or a refining, processing project, whatever, that is going to be of the highest standard. Now, not every project out there that produces nickel that comes into the nickel market is meeting those standards right now, right? So there has to be a realization at some point. It's interesting that, I've got iPhones. Apple are very interesting because they give a message of being whiter than white and being, hot on recycling and hot on sourcing. But the reality is that I'm not sure I've seen any substantial evidence to say that they are. So
Kimberly, kind of jumping on from that, from a pure banking standpoint, how much does what Simon's talking about, tracking the miles traveled, reducing CO2, how much does that raise the cost? And how is that weighed from a banking standpoint?
Well, at this point, we don't know how much that's going to weigh and how that's going to contribute to, because we're just figuring all of these things out, and there's no standard metric of what we're going to be looking for going forward. Obviously, CO2 is the norm, and the reason why it's the norm is just because there's a lot of it. It's easier to measure, and obviously, when you go after something like CO2, you're going after all the other sort of toxic pollutants like particulate matter and also methane and things like that are also very problematic. But we're just kind of working it out. And I think that on the banking side, we are hiring, ESG experts to come in and start to sort of normalize what those measurements are going to be. But what I've seen is that, you walk into, they all have different metrics of what they're looking at on the investment side. And so, Simon's project may, pass a certain standard in one investor's mind, but it doesn't in another investor's mind. And so what we're seeing is that we're seeing there's no sort of there's no sort of consensus on what those measurements are. And I think that a lot of mining companies are now starting to look at that a lot more seriously, because they don't want to be caught down the road by doing something that all of a sudden, VW, they have a, they're a battery metals company, mining company, and they supply like an OEM like VW, and all of a sudden they're no longer allowed to supply them. And so on the battery metals side, it's not a traditional mining company. It's not like, okay, this is my product, this is my stock product, go ahead and use it. It's they have to go through testing, they have to go through deals and qualifications, and the qualifications continue down the road. And so they don't want to be stuck. They don't want to be caught off guard, and all of a sudden they lose one of their biggest clients because they've decided that this does not meet our key investors ESG qualifications. And I think that that's what's sort of evolving. And I think next year, when we have this panel, I think we're going to have a lot more answers to that question.
Emily, can I just jump in and
absolutely.
Just respond to Kimberly a bit? What Kimberly's talking about, I think there's two arguments here, or two strands of the discussion to have when you're talking about the ESG principles behind the materials that go into batteries and therefore go into electric vehicles. And let's think about the framework here, that you're talking about the supply chain for something that people are adopting and buying and paying quite a lot of money for at the moment, not just for economic reasons. They're doing it to feel good about themselves, to feel good about how they're, their local community and not polluting and everything else. So that is a consideration. But the two strands that I was referring to is that what Kimberly's talking about really is a binary argument. It's does your supply, does your nickel, hello Mr. Nickel Miner, does your nickel meet standards enough that I can actually put it in my plant? And I can use it in my cathodes. That's one thing. I think actually that there is going to be much more granular environment around the ESG credentials, in that I think there's going to be a second. So yes, I think that's a necessity. That is definitely going to happen. There's going to be you have to meet certain standards. You have to have, maybe there's a CO2, grams per ton delivered to your plant, minimum or maximum. But I think also there is going to be another market, which is everything else. And I can tell you, we're having conversations. The nickel and cobalt mine will be operating in a small state within maybe a year and a half from now. And we're already having discussions with suppliers, and they are, and people like I was referring to, cathode, battery, car manufacturers, and they are asking us about this stuff. They are asking and saying, well, this looks great. The product might be clean enough, pure enough, qualified, but what are the CO2? What are the miles traveled? Okay, it's in Brazil, our plant's here, that's quite a big distance to travel, maybe it's more attractive. So I think there is going to be a gradation. I think there's going to be a much more granular market, and I think you're going to see, maybe you price off LME nickel, but there's going to be a value in use, and the value in use is not just going to be the pure economics of putting it into your battery plant. It's going to, I think it will take into account all of those factors.
So Chris, one of the things that I'm hearing from Simon and Kimberly is that the drive for what the standards will be are going to come from consumers on one hand, but from investors on the other, i.e. some investors won't look at a project that doesn't meet certain criteria, and some consumers or some supply chains aren't able to accept a product that doesn't meet criteria. Chris, which one of those do you see as a sort of stronger or more important driver, or do you see them coming together at some point in the future?
Well, I think at least initially, you have to incentivize in some ways the mining companies to achieve these goals. And if you're a bank, for example, or a financier, you can certainly lay out the ESG criteria, but low cost financing through green bonds or whatever you want to call them is a great way to do that. And SocGen has obviously, initiated the project financing sort of boom in this regard. And so, I think lower cost financing is one way to incentivize these development stage mining companies to do that. Look, investors, I think as EV costs and pricing comes down, obviously they're going to be more ubiquitous. It's not just going to be some sort of virtue signaling, toy that a lot of people have had to date. That's obviously going to change. But yeah, people are going to care about, to Kimberly's point, CO2 and particulate matter in the air. And it's going to be incumbent on everybody on the supply chain to try and wring those out, or at least try and put a cost on it. And that's always been a challenge. No one, I think, can agree on what the value or the price of a ton of CO2 actually is. I think, you know, when I look at the supply chain and the build out and this whole argument around regionalization or deglobalization, costs are going to go up if supply chains are going to become more regionalized and less efficient. And so it's one of the reasons why I'm so interested in leveraging technology, okay? Leveraging technology to lower your overall costs, whether or not it's with cathode technology or recycling or what have you. It looks to me like a less efficient supply chain is a costlier one. And the question is going to, I think, ultimately come down to who's going to pay those costs. And if it's consumers, then, you know, so be it. But, you know, people, I think, are only going to be willing to spend so much on some of these technologies.
So Chloe, I want to sort of pivot over to some of the questions related to the broader market. What do you see happening when it comes to subsidies and when it comes to programs in China to, I guess, incentivize EV shift? You talked about the adoption of LFP cathodes in Chinese battery vehicles. Can you talk us through that more generally a little bit?
Yeah, and I think this is really one of the more interesting bits that we've seen develop over the past year. You know, when COVID initially hit, a lot of concern in the market was around EV sales and general vehicle sales. And over the past 6 to 8 months, we've seen electric vehicle sales recover much more quickly than ICE sales, which has been really fascinating to watch. You know, I think with regards to LFP in China, you know, most of the LFP, I think actually all of the LFP battery production today takes place in China. So really the LFP story that's really interesting to me is watching these, you know, non-Chinese firms starting to use LFP again, where previously we've seen really LFP make up less than 5% of the light duty vehicle market outside of China for the past few years. So I think there's really been a lot of signaling this year that LFP will start to be used outside of China, maybe starting next year or really in the near term. And that LFP really, there's a strong future for LFP in light duty vehicles.
Kimberly,
there is. Sorry, I just wanted to add on.
That was it.
That's okay. Yeah. You know, it was really funny that like a lot of the story in battery metals has been about nickel, and we've always saw LFP as something like a stalwart, like it would never go away. And it was improving behind the scenes, but it wasn't making the headlines. It's kind of a boring technology. It's been around for a while. You know, the cars, like, you know, I mean, BYD has been a champion of LFP for a very long time. And, you know, I just think that, you know, with Tesla sort of leading the charge again on, you know, using this type of technology in their Chinese made vehicles, it's very interesting that, you know, all of a sudden you're seeing all these bigger OEMs going, oh, we forgot about that. And, you know, this is a pretty good technology. And another thing is that it's the recycling part of it is almost figured out completely. And so when you go back to, you know, what a circular economy is, and this is what we're kind of moving towards, and that's what Tesla's trying to do as well, is that, you know, the lead acid battery is like the first, you know, circular economy. It was, you know, it wasn't, there wasn't a feel good aspect to it. It was mostly financial. It was, you know, how do you dispose of lead? How do you you know, mining lead, disposing of lead? And so it was a, you know, a profitability type of driver here. And so now we're looking at recycling. We're looking at second use of batteries. And, you know, the LFP battery, it can be, it's got you know, it doesn't catch fire as easily as a nickel based one. So we've got, this is pretty, it's been only used outside of China really for, buses and for stationary storage. But yeah, we're Tesla decided to do this, and now everybody's looking at it again. And I think that's a positive thing. Maybe not for nickel markets, but it's a positive thing for the industry.
And Tesla exporting that 7,000 LFP based cars to Europe recently, I thought was a very interesting development.
Mm-hmm, yeah. Well, it's closer.
Yeah.
I mean, it's closer. It's reducing the cash conversion cycle here, and that's something that they have to do. I would add that I would watch what's going to be made in the German plant. I mean, that's sort of their pilot project as well. They're planning on using like the zero cobalt nickel potentially in that plant. There's a really great video of how quickly that they can build these factories. It's by B1M. It's just phenomenal. But anyway, I think that's something we should be watching very closely, what's going to be built in Germany.
Simon, while we're on the trend of recycling, and LFP is easy to recycle, I know that the recycling company that Techmet is behind is US and North America, or at least it is, I wouldn't say focused, but it does have a strong presence here. How do you see, as a mining company, but also looking at recycling, the difference between new feedstock, i.e. mined and processed nickel products, for example, versus accessing feedstock from used batteries, and the differences between what's developing in China and what's developing in North America?
Well, it's interesting how people are looking at recycling of lithium-ion batteries. It's not an easy thing to do. I'm not sure Kimberly means that the LFP batteries are easy to recycle, because as far as I'm,
a more mature technology.
Technology. Well, but more mature, but actually more mature in that they are safer and easier and actually economically better to reuse. So there is a high level of reuse for LFP. There's a very low level of recycling, because actually they're quite difficult to recycle, is my understanding. I'm not the expert, but it's something we've developed. But I'll go back to what I was saying about the drivers for recycling, because if you look at metals and mining markets, recycled metal has been driven purely as an economic gain, because if you can basically get copper out of an appliance and get it back to market, it tends to be quite clean, it's quite easy to recover, and it's a lot cheaper. And so copper is generally about a third of the global copper supply is from recycled copper, right? But with lithium-ion batteries and the metals and materials within them, it's coming, the pressure is coming to recycle, I'm finding, before the volume is there to do so. People are, we have a market-leading technology, and we're expanding as fast as we can. But the volumes are going to be in the future. I mean, let's not forget that these vehicles are going to have a 10-year or so 10-year or so life on the road. So, if you're selling 3, 4, 5 million vehicles globally, you're going to have to wait 10 years to get the majority of those back, end of life. So what we're looking at for our recycling facilities is things like manufacturing waste, obviously, and that historically has been quite high at places like the Gigafactory. So that'll be a good feedstock. But people are pressuring from this sort of the downstream, as in they're saying, well, how much are you going to use recycled material? And we have to have a circular economy. Well, it's easy to say, but it's not very easy to do. And if there isn't volume enough to contribute recycled material into the front end to make new batteries, then you can't make it out of nowhere. So I mean, with my modeling, looking at the supply of recyclable material over time, the most I get to within a decade by 2030 is 10% maybe of sort of nickel, lithium, cobalt, looking into lithium-ion batteries, and that's good. I mean, that's going to be that's going to be hard to get there. There's going to have to be a lot of investment from people like Techmet and other people into other recycling facilities around the world to get to the volume to do that. But it's not going to be a panacea. You're still going to have to mine metal out the ground.
Yes. I just want to add that, the technology, like when I talk about maturity, it's just that, for a high nickel, recycling a high nickel battery is still very low in the technology scale for maturity wise versus an LFP. And they're sort of working on all of these elements. And I just wanted to just quickly add that, you have a battery pack. It has to be down to zero. It cannot be, before it even goes into the recycling plant, it has to be used. Okay, so that when you're looking at decarbonizing the whole supply chain, I think the second use battery is very, very important. I think so I think it's a two-pronged approach here. We have to be able to have the second use. We have to get these batteries down to zero, and then we have to figure out the recycling end of it. And the bottom line there is that all these battery packs look different. So that's going to be another added, caveat to the process.
Kimberly has jumped into one of my favorite questions that I found that people have strong opinions on. So I'm going to jump down to Chris. You're down on how I see my screen, Chris. You're right below me, like the Brady Bunch. So second use versus recycling. I've heard some people go, really aggressively. There's no such thing as a second use case because of how differently these batteries will have been used and how differently each user will have used them. So the idea of using, for example, car batteries to get behind grid storage to cover, but then on the other side, it's, what's the environmental and economic case for taking apart an entire battery if it does have a perfectly good second life, i.e. maybe it can't run a car anymore, but it could certainly cover intermittency from wind. Where do you stand on this debate that has broken families?
Yeah, look, I used to be very bullish on second life, and for all the obvious reasons that you just mentioned, and now I'm a little bit less so. And the reason why I'm not quite as bullish on second life is because, that light at the end of the tunnel around cost parity for an EV relative to a traditional internal combustion engine car is in sight. And so if we get to that point within the next couple of years, which I think we will, where cost per kilowatt hour is $100 or $100 per kilowatt hour or below that, you start to ask yourself, well, does it make sense to, I guess, consume or eat the cost of reconfiguring, let's just say, an old EV battery? Maybe it's got 50, 60% of its capacity left, but there is a cost associated with reconfiguring that for energy storage, whether it's not grid scale or what have you. So, with batteries sub $100 a kilowatt hour on cost, does it make sense to repurpose a second life battery, or just go to the market and purchase new cells and purchase new packs that are geared towards specific end uses and end technologies? That's why I think that recycling in particular is going between scrap and second life batteries is going to become a much bigger deal, much faster, even with, a lot of the buzz out there that you're hearing these days of, oh, well, it's got there's a 1 million mile battery, or I saw a story the other day about a 2 million mile battery. I mean, that's great. And, again, I just think it's going to come down to cost.
It always does.
Mm-hmm.
Well, and if I could jump in there, I think one of the more interesting parts about the recycling question that we've seen come up this year is really what Musk said, and I hate to keep going back to Tesla, but the idea that potentially you could get even higher quality materials from a recycling line than from a raw minerals production facility, because you know exactly what the inputs are into that process. You could end up with a higher quality product. And so that's
rubbish. That's just rubbish.
Yeah,
it's just rubbish. I mean, if you're buying 999s, quadruple nines, 59s nickel, it doesn't matter. Like, it doesn't matter where it comes from. It's just the same thing. If you're buying the same for cobalt, lithium slightly different, fine. But like, you can put 2 containers of the same grade nickel, lithium, and ask someone to tell the difference and test it. They wouldn't be able to tell you.
Yeah.
So let's go. Okay, so I want to Chloe versus
Hold on,
Simon.
can I just make a point about the Second Life? Because Chris, I'm broadly in agreement.
Wait, no, yeah, we did call Chloe rubbish, so I think we're gonna give Chloe the floor to defend herself, and then we'll come back. Chloe.
No, I didn't say Chloe's rubbish. I said what Elon Musk is saying is rubbish, but don't tell him I said that.
Okay. So Chloe, I think that I want to go back to I want to pin down what Simon and Elon have a strong disagreement on. Could you I guess shine a flashlight on it?
Yeah, I mean, I guess I defer to you guys in terms of nickel expertise. So I'm not going to comment on where the high quality nickel is coming from. But I do think that the issue of quality and whether or not it's coming from a natural resource or a recycled resource, for lithium, that is a really interesting question. And these high nickel batteries that would potentially have larger amounts of lithium in them, that's really what a lot of recycling efforts are being directed towards, are high nickel cathode batteries. And yeah, you could recycle LFP battery too, and maybe we'll see that once we see more LFP being used in electric vehicle markets and needing to be recycled. But a lot of the recycling technologies that I've personally seen have been focused on NMC.
Yeah.
All right, Simon.
I just want to quickly add that what Elon's talking about is his own sort of business, and so when we had the battery day, everybody was saying, well, how is this going to change the industry? And people just don't really fully comprehend that what Tesla's doing is very different than everybody else. They're using a different technology. They actually jumped in. They use NCA versus NMC, and they kind of just set the tone. And what they've always done is sort of keep everything within their own Tesla brand. And they have their own battery management system. They have their own charging infrastructure, right? And it basically, whereas, VW comes over here, they have to rely on third-party charging infrastructure and possibly, third-party battery management systems. And so they have a very deep control over what they do. And they're going to have a deep control over what inputs that they put in. And they're not going to be recycling VW batteries. They're going to be recycling their own batteries. And that's what's going to happen. So you're going to have these individual circular economies that are happening. And if you take back your own battery pack, then you can utilize it in a, like Amsterdam, for example, has the stadium that they use Nissan Leaf, battery packs. So they set up their secondary use based on a particular battery pack at a particular size. So we're going to see these individual circular economies, coming to bear. And that's what I just wanted to just mention with Tesla, since we're talking about what Elon Musk says and what's in his mind, which it's always a good debate.
So Simon, I definitely want to do the next battery day watch party with you, because I think it would be a lot of fun. Where do you fall on the, I think one of the really interesting points Chris made was that sort of what's shifted his opinion is that the batteries, the performance of the new battery is so superior that it in that sense, it makes more economic sense to recover something, get a container of nickel. It doesn't matter where the nickel came from, but if that battery is going to have superior, where do you sit on that? But where are the economics of that? Like, can you give me some cost examples as someone who's in the mining and the recycling space of the repurpose versus, recycle?
Well, at the moment, the volumes are so small for recycle, for battery and end of life automotive batteries that, there is a competition that in a lot of territories people are paying and bidding. And, in the UK, we're sort of one of the most advanced markets for electric vehicles, I guess. And people are, researchers are bidding for batteries. They can't buy a battery to test. They just can't find any. So it's I wouldn't take the current state of affairs as what's going to happen in the future, because it's going to go like a hockey stick, right? So, but I was going to talk about the second life argument and what Chris is saying. I think he's absolutely right, that it's all down to cost, and it's down to the cost of new batteries. But if you look at it, my view on second life is that actually, if you boil it down to a couple of key points, what we're talking about actually is movable batteries, like, and, static batteries. So at the moment, second life, okay, there are some, people maybe using an automotive battery for another automotive use, but the majority are for putting it in one place and keeping it static. And that is very well suited to LFP, not for NMC. So the batteries that we're that we're engineering and designing and building and putting into batteries are being engineered and built and designed specifically to be as light and as light as possible, and to have dynamics that are suitable for an automotive use, as in, power on demand, fast charge. These are things that is not really what the second life use is. It's not optimal for a second life use for most of the static use. So I think actually, as the market matures and LFP does get a bigger market share, or even not on a market share, but just in volume, it becomes a lot larger. Those are the batteries that I think will probably be suitable for the second life. I think anything that's a high performance battery, an NMC and NCA, I think actually, as Chris said, the new option is going to be better and more reliable, and it's not going to break down. It won't need so much management. It won't need replacing as soon. I've heard stories in the UK already of some second life batteries that have had to have been replaced because they've actually failed much sooner than their projected life. So as soon as you start to get a few installations where that's happening, you're going to change the economic outlook on a second-hand second life battery from automotive.
And just to jump in very briefly, Emily, I saw you.
I was about to give you the last word anyway.
Oh, well.
Go for it, and then I'll give you the last word.
Based on what I'm about to say, Chloe will have the last word. The one thing we're chatting a lot about lithium ion, obviously, because all these gigafactories are lithium ion for a reason. And I feel like we've talked that to death. But, there are competing energy storage technologies like vanadium redox flow, which, again, do not win on cost, but arguably are better for grid scale energy storage. So, Chloe, maybe do you have an opinion on vanadium redox relative to some of the more traditional energy storage technologies?
I do have an opinion. Thank you, Chris. I think from a technologist perspective, I'm a big fan of a lot of these alternative technologies. The zinc batteries are also pretty fascinating. They are able to use a lot of low cost raw materials, and so their bill of materials compared to lithium ion batteries are quite small. But ultimately, a lot of this comes down to really the fragmented nature of the grid storage market. In the automotive market, there's a handful of big players pursuing electric vehicles. And if you can get in contract with one of those players, you're pretty set. But in the grid storage market, globally, there are just so many different users and customers and a really wide variety of applications and use cases that the sales timelines for these alternative technology developers, they're pretty long. And on top of that, they have to do a whole education piece of what is this technology and how do you use it and how is it better and how is it worse than a lithium ion battery. And so it takes a really long time to actually get deployments. And so to bring it full circle, that's why we've seen some grid storage companies pursue the spec route. EOS Energy Storage develops zinc hybrid batteries, and they're pursuing a spec by the end of the year. And that's similarly, just like Quantumscape, to build up manufacturing lines so that they can achieve some kind of economies of scale that might be competitive with a lithium ion battery for grid storage. So, this is an area that I think about and I research quite a lot, and it's really a fascinating question. But ultimately, it's really, really hard to compete with lithium ion batteries from the economies of scale perspective, from the education perspective, from sales perspective. It's just, and the falling lithium ion battery costs are making it easier and easier for customers on the grid side to purchase these systems. It's just a tough game.
So I'm going to close out by asking each panelist to give me a 2-word answer to a question. I want to hear the metal you're bullish on in the battery supply chain and the one you're bearish on. Kimberly, you can start.
Do you mean price?
No, just
whatever, philosophically, whatever you want. Which one do you like? Which one do you not like?
I think I just want to say, so nickel's a star. Definitely. It's going to be the star for the next decade. It's definitely something that, even Tesla, they're trying to get cobalt out of the system, but it's still nickel. Nickel's definitely going to be the star. Cobalt was, it's a very necessary metal, but I think that there's a lot of smart minds trying to get it out of the system just so that, we don't have any supply chain risks down the road and things like that. And, it's just something that, that there's a lot of smart minds working on, and I believe that that's going to happen.
Chris, bull and bear case.
Yeah, I mean, I'm trying to think of something different because I agree with Kim, but look, it's hard over the next sort of 5 years to not be bullish on nickel for all the reasons I think that we've chatted about. Obviously, copper comes to mind.
Yeah,
I mean, and that goes way beyond just specific EV usage. That's an infrastructure play. So, I guess I know I'm supposed to pick one, but those would be the top two. Bearish, I think maybe natural graphite. Graphite in particular concerns me a little bit in light of what's happening on the anode side of the battery.
Yeah.
And Chinese dominance, quite frankly. I think it's just going to be really hard for anybody to break in given these shifts that we're seeing from a technology perspective on the battery.
Simon, bull and bear, and you can even give us the philosophy of whether it's on price or volume.
Well, I'm an investor. We're investors. So if you ask me to be, what am I bullish or bearish on? It's got to come down with making money, right? So it ultimately comes down to price. I'm going to pass on nickel because I'm obviously bullish on nickel. You know that we've talked about our investment in it, and I think the comments already are spot on. I think it's worthwhile highlighting that lithium is at a ridiculously low price and a ridiculously low. Unsustainably low. It's just that there is no way it can stay this low if we all want to, if the world is going to start driving batteries powered by it. So that has to happen. And commodity prices, immediate spot prices are always, at the end of the day, driven by the availability of the next unit. So right now there is lithium available, so the price is not very high. But it's not going to last very long. And we're just starting to see it coming out of its lowest point now. But when you look at the supply demand outlook, I see, a deficit pretty much every year for the next 5-6 years at least. And then I don't see anything really on the supply side, on the mining and supply side, that's really going to change that. So somebody has to go and put some serious capital to work other than people like Techmet to be able to go and develop new lithium projects. Otherwise, you're just not going to be able to buy your vehicle. So a bearish metal or material. I'm not going to say a particular material. I'm just going to sort of labor a point that we've already made. And Kimberly makes this point, and I've been on a couple of panels with her, and she's made this point in my opinion, very correctly every time. But people still seem to get this wrong. New technologies, it's something changing. Lithium ion is successful because it's been around for a long time. We've been dealing with it for a long time. That is why it's working. People like Quantumscape, people with new anode technologies, new cathode technologies, even the zinc batteries, Chloe. I did a research project in 2004 on zinc batteries, and I thought they were fantastic. How many are there in the system?
Yeah.
it's not new, but there's a reason why lithium ion has become dominant, and it's, for all of its negatives, it has lots of positives. So I would be negative and bearish on anybody saying, oh, well, this is going to be wrong because of this new technology is going to take over the world and change the landscape. It may do, but everything just takes a lot longer than you think on that side.
All right, Chloe, tie a bow on this one for us. What are you bullish on and bearish on?
I think I totally agree with Simon, just to be clear. But I think the material that hasn't been named that I am more bullish on is silicon. I think silicon graphite composite anodes are really going to become more and more common. Right now, silicon's already used in something like 5% in most batteries anyway. So I think those percentages are going to be increasing. I'm not quite sure yet about a full silicon anode. There's a lot of other technical issues there, but at least a higher percentage silicon in EV batteries. And I think, the issue that I'm bearish on is, the industry is still trending away from cobalt, whether it's high nickel batteries or LFP batteries. The cobalt question is still really, there just isn't much support or momentum behind continuing to use large quantities of cobalt. So that's the issue that I'm bearish on.
All right, great stuff, panelists. Adam, over to you.
Thanks very much, Emily. Excellent stuff. We've covered a lot of ground. I've had quite a few questions come in, and actually the discussion did touch on quite a few of the points within it as well. So I'll just pluck a couple of them out in no particular order. But actually to the last point there around silicon and graphite in anode chemistry, someone's asked the ESG dilemma that's rarely addressed. Synthetic graphite loses out badly to high quality natural graphite and Chinese sources of natural graphite as well. When will OEMs buy into this discussion? Does that make sense? And does anyone want to sort of address that? I think the point is around the environmental and social qualities of a synthetic graphite as opposed to mining a natural graphite, and why synthetic graphite hasn't become more popular.
I think that synthetic graphite is used in large cases. I can't remember what the percentages are, but it's used because it's just quality control. They know what they're going to get, right? And it's also part of some using some waste, the coke from the steel making industry, and being able to have some sort of circular sort of enterprise that's happening there. But we're still working all of this out. I think that in China, I did a quite an extensive study on just sort of the environmental ramifications of what was happening with the graphite mining in China. And obviously there was an expose in Washington Post a couple, I guess 3-4 years ago now, regarding all of that stuff. And I think that that's something that it's not only graphite, it's the whole industry that everybody's working on to try and solve these issues. And so we're trying to get cobalt out of the system because of very, very similar issues, and that creates a security risk on top of all of that stuff. And I think that every other metal is going to be, we're going to have like on a case-by-case basis of trying to clean up and trying to use these ESG types of metrics to clean up that part of the industry. Absolutely.
Okay. Thanks, Kimberly. If anyone else wants to jump in, if not, we'll go on to the next question. Okay, I've got someone's typed in really quickly. What about manganese? Does anyone have a view on manganese and their increasing role within the battery chemistry?
I mean, one of the challenges I think with the larger markets, right, like copper and nickel that are, orders of magnitude larger, and even manganese that's orders of magnitude larger than copper and nickel. Is just from an investment perspective, it's hard. You don't get the same torque with demand shocks. I mean, for lithium, which today is a 300,000 ton a year market going to 900,000 tons in the next 5 years, whatever your view is. I mean, if you're a hedge fund manager, you love to hear those kinds of stories because it's an enormous shock and it implies volatility in the price, and that's how you generate alpha, and that's how you get paid as an investment manager. It's just harder to do on a short-term basis with manganese or some of these other metals. I know I mentioned I was bullish on copper and nickel, and I am, but that's not a short-term kind of prognosis. It's longer term. It's 3 to 5 plus years, and I would sort of feel arguably the same way about manganese. I mean, I think maybe if there's a challenge with manganese, it's just the fact that if we are moving towards LFP, if we are moving more towards NMC 811, it implies a little bit less manganese in the battery on a percentage weight basis. But of course, it does imply increased demand. So I just think it's a question of torque and the price, and I think that's probably why you haven't heard a lot about it, at least to date.
Okay, good. Any other thoughts on manganese? So quite a few little bits coming in. Yeah,
just wanted to quickly say that I absolutely agree with Chris, but we don't know what the high nickel, zero cobalt is going to look like. And so, there's, like I said, the top guys in the industry have been working on getting cobalt out of the system. And there's a lot of indication that that actually manganese is going to be up. And so the two metals that are being researched heavily is actually, already in the system, which is manganese, aluminum, and also iron. So there's an NFA type of battery that is being researched as well. And we suspect that Tesla's new zero cobalt battery is going to be an NMA, just from Jeff Dan's work of what he's been working on. So you're going to see some, if you're taking cobalt out of the system, then you're going to see manganese is going to have some more airtime.
Okay, thank you. We've pretty much run out of time, but I've got to take one more question if everyone's got a minute to spare. What's the panelist view on upcoming exciting lithium carbonate projects out there? Someone's mentioned projects in Chile. They're asking specifically, but does the panel have any takes on what projects are exciting them in the lithium carbonate space?
I'm very bearish on Argentina. I'm just going to say, for those of anybody watching Argentina's got a 2-year, yikes type of moment. So I am bearish on Argentina currently.
Okay. Any bullish responses or equally bearish on scenarios or places where to look out for?
I've already said that I think the industry is going to struggle to supply. I've got a deficit outlook, so I'm always looking across for interesting projects. There are some out there, but there's nothing game changing at the moment that looks realistic. So it's a tough space.
Yeah, nothing game changing. I mean, obviously the hard rock side of late has gotten a lot of press, as has clay, which I think has a lot to prove. But the question is, I guess, carbonate, and also that involves a discussion of hydroxide and the growth there. And I think the market generally looks at it and says, okay, high nickel cathodes, that requires hydroxide. So I just think you want to be thinking hard about hard rock to hydroxide economics, because it looks like to me that's one of the main directions for the market.
Okay, fantastic. I think everything else that has been submitted, we've sort of broadly covered in the discussion. This discussion will be available to view on demand at a later date. We'll publish it on the one-to-one media channels next week. I'd like to thank all of the panelists for taking part. Thank you for your time and your expertise. Emily, Hersh, thank you for taking us through and moderating this very interesting discussion. I hope that's been fruitful for our viewers, and thank you very much for tuning in to One-to-One Mining Investment Americas, everyone.